Yeah, today's topic of discussion, right? I mean, there's a very interesting term that you coined that I've never heard about this term before.
I'm surprised. I'm surprised nobody said this.
Yeah, but I've heard it for the first time from you, and it's contagious. Now everywhere I want to use that word.
I
Can
think
you please introduce that to us?
so. Let's talk about. I'll tell you more about it. Let's talk about Bankruptchain. I'm surprised people don't know this term.
Okay, yeah, go on. What is Bankruptchain?
So I mean, you should know it. So it's basically what we've been told over the last 14 odd years by every dumbhead Twitter influencers or Instagram influencers. You can see a lot of them on LinkedIn today. That it's a technology that is going to create the next internet, that it is going to create the next world currency, and literally everything. So some people have said this is the solution for the Russia-Ukraine war also. So it's gone that far. That's the power of the technology.
So it's been there for 14 years, right? So can you did it solve? Is it the global currency now?
No, that is because apparently, as per the influencers, it's because we don't understand it fully. So we are like, as they claim, we have small minds, so we don't understand
Puny
it.
minds.
We're puny minds, so we are like similar to same things have been called for other guys like Bill Gates, Warren Buffett, Raghuram Rajan. All have been called same names. So it's because us who don't understand the technology and who do not adopt it is why it has not been able to soar. If not, this technology is very similar to communism. It would have made everyone rich. There would have been no inequality, and we would have been living in I don't know if you I don't have a better word for it. It's called utopia of everything is abundant. Everybody has everything.
So, what's so revolutionary about this? I mean, one thing that I've seen is I've seen a lot of people losing money over it, and losing money is not foreign for the world in general. Like there have been scams that have been perpetrated by a lot of people across decades, right? I mean, the most popular one is the Bernie Madoff scam, and he was sentenced to 120 years in jail or something like that.
150.
150 years in jail.
prison.
Yeah. So Bernie
Two
Madoff,
lifetimes.
2 lifetimes. Okay. So Bernie Madoff is sentenced for 150 years in jail for wiping out $60 billion.
I think yeah, around 60 billion.
$60 billion. And this guy who has just literally wiped out, I mean, nobody can blame him, of course.
That's why it's revolutionary. That's what we're not talking. It's a revolutionary technology.
Do Kwon has wiped out $60 billion himself.
A little less than that, but
Little less than that.
that's only his. But there's a snowball effect, and he's going to blow more. But let's not put that on him. The poor guy has already enough blame on himself.
Okay. But he's not in jail. He's not even being tried. And the audacity of him to go on Twitter and say that, you know what, I'm going to start part two.
That's what is revolutionary about it.
So this technology has truly made world a better place.
Yeah.
The Bernie Madoffs of today need not go to jail. They can just start the pyramid scheme all over again.
Yeah, as you said, you said the balls. It's not balls. It's big brains. It's big brains. You have to have big brains. Again, if people like you and me could do it, if Bill Gates and Raghuram Rajan or the Warren Buffetts could do it, they wouldn't be criticizing it. They would be making money out of it. So it requires big brains. And if you have the right brain, you can use this technology and you can become rich. That's what we've been looking for, right? Everybody wants to become rich, and your technology.
But how did so many people buy into it, and how did it become a $2 trillion economy? Like let's say, because all people, I mean, everyone is so secure about their money. They want to hedge risk. They want their money safe. They want to always invest in safe assets. So how did that safety? Um, how was that promise of safety given to all these retail investors?
So it's not about safety, right? Like as we talked in the first, why do people have a fetish with communism? The same reason why do people have fetish with pyramid schemes is because everybody wants to get rich. And someone said, "Hey, you get 8% interest to put the money in my wallet, in my account," and then the people just went and put it. So at some point there's a threshold beyond which if you promise them results, like someone said, you put in your money here and it becomes 10x tomorrow. So that's what the phenomena behind people's minds, like beyond the threshold, if you promise them certain results, then they are willing to throw away the safety.
No, but not okay. Throwing away safety is one thing, but there are incidents about people putting their entire life savings into something called the stable coin.
Yeah, Luna. And we're gonna talk about it. Yeah.
Yeah. So can you just segue us into that topic where we understand what the stable coin is and how did the crypto land leverage the stable coin to increase the number of investors?
We're gonna talk about all of that, and we're gonna expose the question you asked, like why people just went all in into this. Welcome to the Unsettling podcast, where we talk about everything interesting that happens under the sun. So you want to understand Dopon, but
Yeah, how did he manage
so
to
that's
pull that off?
yeah. I mean, thing is, for that you got to go two steps back, and you have to understand what are stable coins, and we need to go through what's the what was the OG stable coin actually was.
Mhm.
So stable coins are coins whose value remains fixed to the villain of cryptocurrencies. So the villain of cryptocurrencies is dollar, because all the influencers want to replace the fiat system, the dollar, with the Bitcoin or whatever coin they think it is. So it's a villain of cryptocurrencies. But here's the irony that stable coins are what they want to use, and their value remains fixed to dollar.
So if stable coins value is fixed to dollar, then why not use dollar as the coin? Oh,
Good,
because the government is going to be involved if they directly use dollar.
good question. So who issues dollar? The
Yeah.
reserve banks.
Yeah.
Now, if you are an exchange who wants to manipulate the market, say if Wall Street wants to manipulate the markets, they got to use real dollars. So this was something, again, it's financial creativity. So if you can create a market outside which does not involve fiat at all, so you create your own coins. So that's what a stable coin is. So if you don't, if you want to use dollars, you cannot create artificial money and you cannot manipulate the markets. So it's an inconvenience, and it also, again, it comes in the way. Right now we want to replace
So
dollar.
these guys are masterminds then.
These are
No,
very
literally. So you've literally give them credit for being masterminds.
really creative.
Did they accidentally create the snowball effect of Web3, or are you saying it's an orchestrated mastermind
So
master stroke?
definitely not at the origin, but I think Web3 is an evolution. So you start with
So you were talking about the OG of stable coins, right? So
yeah.
what is the OG of stable coin?
Yeah, so I told you, if you are an exchange, you want to create artificial money so that you can manipulate markets. That's if you want to do that. I mean, not all exchanges do that, but
Yeah.
if you want
Let's
to do
say I
that,
want to do it.
yeah. So that's how the OG stable coin came into existence. So let me show you a small infographic, okay? Take the example of a casino. A casino prints its own casino chips. And if you are some player in a casino, you got to buy the casino chips with exchanging dollars, and you play with it. And
Of course.
while you walk out of the casino, you exchange the casino chips for dollars.
Mhm.
So think of it like you created a casino where the game is you bid for some item,
Okay.
and if the price goes up, you sell it. So it's like a trading casino. It's a game of trading.
Yeah. Okay.
That's the game, and you got to use the casino chips. Now, the problem for you is if people start making money out of it, then you got to pay them. So you don't want to do that.
So you as in
The casino, you are the casino.
oh, let's say I am the casino. Okay.
Yeah. So the problem for you is if people start making money, you got to pay them.
Yeah.
But you want to attract people in also, so that
There's a hope of money. There's a
you
hope
give them
of
a hope of money.
yeah.
You
Okay.
give them hope of money. So how do you
But
do
the
that?
house always wins.
The house always wins. So you create your own gang, and you give them free casino chips. And what they do is they bid for this item in the casino with that, and they show that the price is going up 10x, 20x every day.
Okay.
So an average guy walking by the casino, he sees, okay, the prices are going up. Maybe if I put in, so this is where the safety thing goes for a toss. So like normally we all want to keep our money safe, but when you see this, if I just put in 10 rupees today, it's going to become 100 tomorrow. If I get this promise, so I'm gonna go there and I'm gonna put my money. So this is how a casino can invite you to play their game just by artificially manipulating the prices. Now replace this casino with an entity called Bitfinex. which
Okay.
drives most of the Bitcoin trading volume, and the casino chips with Tether. And Tether, there you go, is the OG stablecoin, which was minted by a company called Tether, later acquired by Bitfinex. And there have been, I mean, a lot of people have already pointed it out that the trend between the rise of Bitcoin and the volume of Tether being printed is very correlated.
So let's say Tether is printing their own coins, right? No, so they're no different than a bank, reserve bank.
So it's not so simple. Like Tether, if they did that, now people are not gonna buy into it because we've evolved.
So they pegged it to the dollar.
We've a little evolved. So they pegged it to a dollar. That's what they told you. That's what they told the people. That every Tether printed is pegged to a dollar in their reserves. Now, interestingly, I'm gonna show you. Before I show you, I'll tell you why this even happened. So the New York General Counsel, Attorney General, actually, he fired off an investigation into Tether and Bitfinex, and there were a lot of findings. His claims are that Tether's claim that all the Tether they've ever printed is always backed with the reserve currency in their reserves
Of
is
course.
absolutely false. That's what his claim is. And eventually, what Tether did is, and Bitfinex did is, they paid off a speeding ticket fine of 18.5 million and got away with it. But let me
Wait, they got away with it.
and they got away with it is like
So they've never shown where this reserve cash is.
none of it. Nobody knows where the reserve cash.
No, but there are some people who are holding Tether, right? And then if all of them rush to Bitfinex and ask for the dollars back today, what is going to happen?
The entire crypto economy will crash. So that's not happening. That's not happening. So that is why the casino needs to keep the game going, and that's why you create a new game every time. So you create ICOs, you create Web3, you create NFT. Maybe the metaverse is the next. So you create a new game. The casino has to keep the game going, because if the casino's games stop and people get bored of the games, they're gonna come out and they want to exchange their casino chips for.
Of course.
The casino does not have enough dollars for the coins they printed, because not all the casino chips were given to customers from whom they take dollars. Some of them were created out of thin air, given to their gangs to manipulate and create artificial volume in the market. So the casino will crash and the casino will take down the entire casino economy. I mean, if you look at what the Tether meant.
This is allegedly, or is this proven, or is this even so? How true is what you're?
So to your question of how true my claims are, so let's listen to interview at CNBC, but done by Tidra Bosa with Tether's CTO and Tether's general counsel, who was representing them in the court.
Let's watch it.
Let's just watch it. So that will answer you why what I'm saying is true or not. Let's hear from the
horse's mouth.
Exactly.
Published a pie chart that showed less than 3% of that actually was US dollars. More than 50% of that is commercial paper. I know you guys have said that it's rated A2 or above. Can you give us any more details about what exactly that commercial paper is?
So we don't disclose our commercial partners, so that is quite important. We want to, given our portfolio composition in commercial papers, we believe that is quite important to respect the privacy of the banking partners that we work with.
So let's just pause for a minute. So he said rated above A2. So who's rating that?
That's what I'm going to do.
So because he's not disclosing the entity, then who rated the entity which was undisclosed?
Any accountant with a license can rate a security. So that's what they've done.
So private accountants.
Yeah, let's listen to them.
Paid for by Tether themselves.
That is speculation. So there's never been an audit, and that's a point also covered in this interview here.
So you've talked a little bit about these attestations, which is kind of like an audit, but it's not an audit. What's the holdup? Why can't you guys have a proper audit of Tether reserves?
So the attestations are part of assurance services offered by independent accountants. Audits are another form of assurance services, Deirdre. For now, we are providing those quarterly attestations, those assurance attestations showing that Tether is in fact fully backed and reserved. We are working towards getting financial audits, which, by the way, no one else in the stablecoin sector has done yet.
And then why is that the benchmark? And what does he mean by trying to get an audit? You just get an audit.
No, because
What's there to try in that?
so I don't have enough reserves. By the time of audit, I have to cover them up. So I have to cover them up, and only then I can file for an audit.
So build another layer of underneath the existing pyramid.
Yeah, exactly. I mean, find enough fools to fill up my reserves, and then I can go for an audit. Maybe I can go for an audit.
No, you're talking like Bill Gates, and the crypto influencers that I follow on Twitter, they say Bill Gates doesn't know shit. So you're talking like Bill Gates. Don't talk like
they all worship this guy, the CTO.
Of course they will.
Follow Aldino. But yeah, you heard from the horse's mouth. They've never been audited. They only have less than 3% in reserves.
In dollars.
And a lot of it is backed. The rest of it is backed by securities granted.
So the SEC can't touch them.
So the problem is here. The problem comes here, right? So what are they trading in? So will the SEC go behind a casino? No, they won't go behind a casino.
No, they will if the casino is operating in a land where they're prohibited.
The casino.
So they don't have adequate laws for crypto. They don't have adequate laws for cryptocurrency.
Exactly, and that is why.
That's what these guys are leveraging.
So these guys are trading in something which was never mentioned under the SEC law, and
oh yeah.
And these guys.
Oh yeah, and casinos they initially they trade fiat. Oh, even these guys trade fiat for.
Good point. Good point. Very good point. Now Bitfinex directly does not take USD and gives you Tether.
Then.
So they partnered with a third party.
Okay.
Called Crypto Capital Corp. And there's a story behind like they ran away with the funds and Bitfinex is still trying to recover.
This sounds like an extremely interesting story. Tell me all about them.
So
who are these guys who ran away with whose money? Did retail investors give money to a third party?
So yeah, if you are to invest and get Tether, you got to go through Crypto Capital Corp. You give your money to them, and then they increment your balance. So they increment Bitfinex's Tether balance, and Bitfinex increments your Tether balance in your account. So you never giving.
So how? So there is some transaction happening between those two guys at least.
It's more of an understanding that Bitfinex's money is with Crypto Capital Corp. And whenever Bitfinex or the Bitfinex's investors want it, they'll give them back. And this is what happened in 2018 is when Crypto Capital Corp just disappeared with the Bitfinex's money. And that's what triggered the whole cycle of investigations into them.
Because they lost real dollars.
Yeah,
they lost real cash.
Yeah, because the scammers got scammed. By the way, more of that in a link below. You can understand more of this. We're not going to talk about everything about that, but it's a very interesting story to read about.
Okay.
But Bitfinex is back up. They're still operating. It's not like they've gone down. We just heard that.
Yeah.
So this crypto capital story was 2018, 2019. This the interview just heard was 2021 after the investigations happened due to people losing money. But Bitfinex is back up. It's still $1.
But somebody must have exposed, right? What is this paper backing the?
Expose what people everybody knows. I mean, we're talking about it now. A lot of people.
No, I'm talking about, let's say, okay, 3% is backed by real cash reserves, and then over 50%, like she said, is backed by
security,
paper security,
paper bonds issued to some Chinese companies whose founders are never going to come out and talk.
Chinese. So how do you know that they're definitely Chinese?
That's what they. I think they've revealed it somewhere, but we don't know who the founders are. They're never going to come out and speak. For all we know, maybe these are the same guys. We don't know. We can just speculate about it. But
so this in entirety, this screams, I'm shady. This screams of shadiness, and it's. So how are people buying into it? I mean, I just don't understand.
Everybody knows that
they are
a casino. In a casino, always the house wins, but people put their money in a casino and they go there. However, to your point, yes, that is where our hero Dokon comes in. So
Yeah, I love this guy.
So this stuff, as you said, is very shady, right? I'm going to back it with a
Of
dollar,
course.
and of
Yeah,
course,
yeah,
don't have those dollars, and people think, oh, I'm a casino.
yeah.
So this dude is done his, I don't know, masters from somewhere in Stanford, and he's worked at Facebook. And now he decided, okay, let me flex my brains because his big brains is bigger than all the smart minds in the world. And he said, I'll produce an algorithmic stablecoin. And he produced UST and Luna. So I'll show you a very simple infographic of what he thought to make and how it worked. So the very basic principle about UST and Luna is what's called a Terra protocol. So you exchange $1 worth of Luna, you send it to a Terra protocol, you get one UST. And you can do the reverse, you can send one UST and you will get $1 worth of Luna. What is the price of Luna is, there's a simple algorithm where they get the current
They balance it.
exchange traded price, and it's updated on the blockchain, so it's decentralized basically. Of course, more on that decentralization later.
Don't even say that word.
But his basic principle, if you look at this, is if you take one UST and it is currently in the market as $1.5, then people will start selling $1 worth of Luna, and they'll mint one UST, and they'll sell that one UST. They'll get basically 1.5 UST, and they'll sell that to 1.5. They get $1.5, and they profit from it. But effectively, they are pushing more UST into the market, and that's how the volume of UST in the selling segment of the market increases. So that will, bring the demand and supply. The supply goes up, demand goes down, and that's how the UST price will fall from 1.5 to down. So effectively, his protocol wants to create that scenario when one UST is more than $1. The reverse. What if one UST becomes $0.5? So in this case, you can mint $1 worth of Luna using $0.5 worth of USD. So you put $0.5, you get one USD, and with that you can mint $1 worth of Luna. So with just $0.5, you can mint $1 worth of Luna, and then you can send $1 worth of Luna on the market, and you will get $1. So it's an arbitrage. The reverse case when you
So
had
that's how there's balancing USD and UST.
Yep. And when you do this, when you're selling, minting UST for Luna, you're making UST disappear off the market. So UST supply on the market decreases, and there's a demand for UST because more and more people want to mint Luna and profit from this. So that will, increase the demand for UST, and the price of UST will go up.
Okay.
It's a good, without
Now I have a very basic question. Like,
Yeah.
let's say people have done all of this magic, creative finance, and I've got like thousands of dollars of worth Luna. Why do I want to keep Luna? What do I do with Luna?
So you're asking the question that should have been asked when this protocol was launched and when people were buying into it. Because if you look at this infographic I'm showing you, the entire way this is going to work, if one UST goes below $1, is you mint $1 worth of Luna, and you will be able to sell that $1 worth of Luna for $1. So effectively, there has to be a demand for Luna to exist.
Exactly.
If
And where did that demand come from?
So that's a question that when crypto market is on the up, you can create demand for any coin because you can manipulate the prices and the price goes up. So Luna went up from $1 or $10 to $116, $120. So people want Luna because its price is going up. So when you can do that, when the crypto market is in a bull run, nobody suspects you. So Terra, the way it grew, it became the number 3, number 4 in the market volume. It became the top 4, 5 rated coin and coin market cap because crypto market was on a bull and Luna had a demand because people wanted to buy it because it's going up.
So what is Terra and what is Luna? What is the difference between mother?
Terra is the entity which created this. So
Okay.
Terra protocol. So one UST, one US Terra.
Oh,
And Luna is the opposite. So as I showed you the protocol. If you exchange one UST, you get $1 worth
Got
of
it.
Luna. If you exchange $1 worth of Luna, you get one UST. The entire thing depends on Luna having a value for itself. The question you rightly asked is what happens if Luna does not have value for itself. That's where we're gonna go. That's where we're gonna go. Wait,
Okay.
wait for it. So let's for a moment think this is in the crypto bull run and everybody wants to
Okay.
have Luna.
So let's say it's 2020.
2021. Let's say
2021. Okay. Okay.
Now in comes Anchor Protocol. Unsuspecting entity Anchor Protocol comes in and says, if you give me your house, if you lend me everything that you have, or you just put your house on mortgage and give me all the money, I'm gonna give you 18% fixed returns.
Fixed.
Yep,
18%.
18%.
None of the banks can give me that.
Fuck banks, man. This is not about banks. I'm gonna give you. This is financial freedom. This is your road to financial freedom. You put your every month salary, you put your house, your savings, everything into me, and I'm gonna give you 18%. I mean, imagine the amount of money you're gonna make in just 1 year. You're gonna make shit tons of it. And how am I gonna do it? I'm gonna lend your money to someone else for 13% interest. And how am I gonna get the rest? I'm gonna take collateral from the people who I'm giving my money to. So again, the collateral is crypto. So I'm gonna take coins which give something called staking reward. So unnecessary to think about it. Think about it like if you hold a crypto like Ethereum or some staking coins, you get a 5 to 9% return if you stake them in the protocol.
But the definition of taking a collateral is dependent on the collateral having certain fixed stable price or a future price that's greater than its current price.
That's what in 2021 we believed. No,
Crypto goes up and down, and
no,
that's the reason why they
2021 we're not in 2022 we are asking all these questions. In 2021 nobody asked these questions.
In 2021 everyone wanted to go to the moon.
Yep, and everybody thought crypto is going to change the world. This is what people thought in
Why
2017.
did anyone ask how? I mean, I'm sure there are a lot of people who asked how, but
yeah, a lot of people,
those guys are just
those
non-believers.
were just kicked out of
They're just boomers. They're just boomers, right?
And when people are
They're not cool.
and people are making money out of it, why are you asking questions? You have a problem with people becoming rich.
I'm sorry.
So that's
So
why
they'll call me a fucking commie.
Yes, exactly, because you have a problem with people becoming rich.
Oh, I'm sorry.
So you're asking all these questions.
Okay,
It's not
so
good.
you, the Anchor Protocol, takes my house, takes all my money, promise me 18% return,
Yeah, I'm telling you.
and then you're lending the money
Do some
for 13% interest. You promised me 18, but you're getting only 13.
Yes.
And the remaining, you are taking
I'm
in the
earning
form
it. I'm earning it somewhere else in something called staking protocols.
Okay, what
From the collateral I've taken from the guys who I've lent it to.
Yeah, sure.
It's again a lot of mental gymnastics and financial gymnastics.
Let's get into it. So
So
you've taken collateral from these borrowers
yeah, and
who I think are pretty smart, you know.
yeah, and the problem comes later. So now because I'm giving this 18% return, I have funds like 3AC, Celsius, Voyager.
No, but hold on a second. Just because you hold collateral doesn't mean that you can disperse money through it.
No, that's where staking protocols come in.
Okay.
So there are coins, crypto coins, which run on proof of stake mechanisms.
Okay.
And for that, you have to put in a certain stake of your coin, and you get to be part of the blockchain update protocol. More of that coming later.
Okay.
But if you do that, basically you earn a standard return of somewhere between 5 to 9%, depending on some coins. So Ethereum proof of stake will give you around 5%. There are some coins which give you up to 9%. So that is by participating in this proof of stake protocol, I get a standard. So I'm not getting 5 to 9% in dollars. You don't understand. If I invested, say, 100 Dogecoin does not follow proof of stake, but think of some random coin, moon coin. Say moon coin I invested, so I'm getting 5%. So 5 moon coin every staking cycle.
Okay.
So I'm getting the returns also in crypto. So that's how I'm making the returns in crypto.
So this guy's a bank.
This guy's a bank, and again here's
but because he doesn't have the permissions according to the government, and he can't play the big game, he created a game of his own.
Yes. Now here's also the big catch. If you invest UST, he's giving you 18% interest on UST. but he's only earning 30% interest, 13% interest in UST. He's earning his rest 5 to 9% in other cryptos. They're not coming to him. Those 5 to 9% is not coming to him in UST. It's coming to him in form of the crypto is taking it in.
So though that 5 to 9% is not pegged to the dollar.
It's but in 2021 you are, so it's going up.
Oh, so it's better than the dollar.
It's everything's going up.
What the fuck am I talking about? Dollar or like a
It's no more about dollars. So because you're this grand entity who can do all this, so you have funds like 3AC, Celsius, Voyager, big funds, very big funds come in and they put in their money because bro, they're giving 18%. Shit. I can lend, I can take money, I can give 14% to my investors and put 4% for myself. It's again arbitrage, brilliant money that's gonna come in, right? But the problem is this, that what happens if there are not enough borrowers to compensate the depositors? Because I'm saying I'm going to give you fixed interest. I'm not saying if I don't have borrowers, I'm not going to give you 18%.
and this fixed interest part is there in the smart contract.
Yes. So you got to keep paying me. And here comes the problem. Here comes the problem. 2021, we are here. And Anchor Protocol sees that there are not enough borrowers to pay this 18%. So smart guys, they decided, okay, somewhere down the line, we will make it 5%. The problem is if they make that immediately, everybody's going to pull out their money, go back and put their money.
Oh, so they wanted to bring that down from 18 to 5?
5, around 5. So
then what about the entire smart contract, decentralization, no control with
more that are
entity?
late. So the thing is, smart contracts
So it's
are not
directly thrown out of the
immutable.
window.
They're not immutable. This is the fallacy of blockchain. So anything on
smart
the
contracts are
blockchain
not
can be
immutable.
edited. Only thing is that update is voted upon by the stakers in the
Right.
So it's not like it's
So if Dokon wanted to do it, wanted to bring it down to 5%, he needs to get approval, right? He needs to get the votes.
But here's the thing. So people wanted to do that. They wanted to bring the Anchor protocol down to something stable. Look, you're asking all the questions that are like very poking, and we'll come to that later. Like why anybody can do that.
Okay.
So the problem was seen, and what Terra did is they were a very successful company at this point of time, and they provided enough. So because all the UST banking, everything dependent on people being invested in that. If people didn't believe UST was a good stable coin, they would leave it and the entire UST Luna is going to crash. So Terra provided collateral to Anchor protocol so that they can maintain that 18% return for at least 10 years.
Okay.
So all things going good, everything's fine, but one small glitch happens. Okay. So someone on an exchange called Curve and Binance, they dumped 200 million of USD on a single at one shot. Think of it like someone selling 200 million USD immediately. So there's a lot of volume sold on the market. So that brings down the price of USD
out of nowhere.
Out of nowhere. Some people call it a coordinated attack. No,
coordinated attack on whom?
On USD. So this is also because Do Kwon behaved all cocky.
Okay.
Let's we can look at this video where he says it's fun to watch companies die. This is just
what did he say?
It's fun to watch some companies die.
I wonder how many of these companies you think are entering the space just because it's hot and there's a lot of funding versus the ones that will still be here, like 2 to 5 years later.
95% are going to die.
Yeah.
95% are going to die. Yeah. Yeah, there's also entertainment in watching companies die too.
And this was like just few days before the Luna crash happened.
So he was preparing himself to sit at home and jerk off when his company is going to die.
We don't know that, but at that point he was very cocky because his company was successful.
There he says that, and okay, that's extremely distasteful.
And that's distasteful. So it's possible that he, rubbed off the wrong people.
So they just dumped 200 million.
So there are smarter people who saw already his protocol had a death spiral in it, and that death spiral is what they unfolded. So the moment they sold
the first domino chip,
yes, it's waiting for the domino chip to happen. That was that 200 million USD.
So all the people who have bought the dip, all the people who have bought Luna, you would have wished, you would have prayed to God that there would have been a government that would have stopped such a massive crash in such a short period of time. You can't do that on a stock market, right? You
Yeah,
can never do that.
regulations. But
There-
it's happened, like flash crashes have happened, but then they're investigated
No,
and
but-
people are punished for it. Not like Do Kwon's not going to be done for that.
No, but let's say let's take Indian stock market into account, right? Like let's say the stock comes down 10% in an hour. There's something called a
Lower
pause.
circuit. Yeah.
Yeah,
And
it is a lower circuit, and then they pause trading for a while because they just want to they
Because-
just they want to stop the momentum, and this is actually orchestrated by organizations that
Indian
govern
stock exchanges.
govern it,
Government, yeah.
and these are central bodies.
No, we don't want centralization.
These are central
we don't-
bodies that is trying to save you.
But we don't want them. That is so.
So you don't want them to save you. You want to crash and burn.
I am poor, and I feel that is because of the central bodies. So I believe in this decentralization, and I'll become further poor. That's what's gonna happen to me. So this flash sale happens. So this makes USD come from $1 worth to $0.94, $0.95. But this is not 2021 anymore. This is 2022 May. And 2022 May is when Bitcoin has fallen from 60 to 30 and it's coming to 40. So crypto is on a slide and people are already afraid. Like these are the same people who just went all in. Now, because they are not seeing the returns for the last 6-7 months, they are wary. The moment they see this flash crash, they see like, oh no, let's pull my money out and let's take whatever I can get. So now more and more people start pulling their money out of Anchor Protocol. They start pulling their money out of 3AC, Voyager. And what happens is this makes USD fall even more because people are selling their USD and exiting the crypto market. So there is a very strong downward pressure, which started off because of this flash crash. And the downward pressure is now even more than what the flash crash was. There was just 200 billion USD, but think about all the investors wanting to now sell their casino chips and get out. So it's a huge downward pressure.
The fun is over.
Yeah, and now here you go back to
It's time to go home.
No, but now here's the reverse thing. Now if the genius of Do Kwon, he created a protocol which said if USD is below $1, you can burn $1 worth of USD and mint $1 worth of Luna. So you can burn one USD
So you can
and
print
burn
a lot of Luna.
Yeah, you can print a lot of Luna and profit from it. So people should buy USD and burn them and make Luna. So that should create a backward pressure on this downward selling pressure. But see what happens. So people take this USD and they buy Luna and they try to sell it. Now crypto is already in a downward trend here.
Okay.
So crypto is already
So they're buying Luna to sell it.
Now already Luna is being already sold because all this is already have a domino effect on
Of
Luna.
course.
People are losing confidence in it. We're already selling Luna.
And if there's a rush of people selling a lot of Luna, then there's tremendous supply of Luna in the market, right?
Yes. And now these guys who are trying to profit from the arbitrage, they bring even more Luna
pressure.
to the market. And that was
No, there
that's
won't
what,
be any buyers.
yeah, that's what happened. So $120 worth of Luna. Nobody wants to buy Luna, man. At this point, USD is below $1. Why should I even buy Luna to mint USD? Because I'm not going to make money out of it. I want to do the reverse. I want to burn USD to make Luna.
Okay.
And even if I'm doing that, I'm not finding sellers for Luna. So that's what happened. Luna went from $120 to 0.01 or even worthless because everybody wants to sell Luna. What happens when everybody wants to sell something? It becomes worthless. Everybody has a lot of it and everybody wants to sell it. Nobody's going to buy it. That's that.
So how are people, this happened a couple of months back, and then I see people talking about buying the dip again, buying the dip again, buying the
Yeah.
dip again, and then they're investing in so many cryptocurrencies. There's so many projects, but clearly we can see, let's take equity markets, right? You can't fall from $120 to 0.006 because there would be some money in the bank, right? And your valuation would be at least equal to cash in the bank.
That would have been the case at least if this was Tether.
Huh.
This is not even Tether. This is just something backed out of thin air. Luna itself has no value.
Exactly.
And you're backing a stable coin with that.
But Tether is also debatable because of the shady.
Oh, that's yeah. So that's obviously everything's shady here.
Because Tether only has 3%, right? 3% cashes. I'm talking about proper cash in the bank.
So yeah, I mean, obviously, like at least they're on paper back, and these guys are not even. And like for people who believed into it, so it's not just simple guys. funds, these big funds I mentioned, 3AC, Signature, Voyager, everybody, they stopped withdrawals for some time because what did they do?
But isn't 3AC isn't a venture fund?
Yeah, it's a venture fund, and they invested in this for these 18% returns. So what they've done, they didn't just
So their
engage,
LPs might have come knocking at their doors, trying
not
to.
just their LPs, right? What these guys did, they engaged in something called carry trade. So they borrowed money from someone else and invested that into this, so that so they borrow at less than 18%.
Of course.
It's arbitrage, right?
Of course.
And the returns, they earn from the returns. So if they earn at 18%, they borrowed at 14%,
course.
6% is theirs. So when this entire scheme comes crashing, or not just they are not the ones who are affected, they are fucked. But the people who lend it to them are also fucked. And that's what happened with a lot of crypto funds. Whoever was, it's just a snowball effect on the entire crypto ecosystem. And you know what this followed, right? Bitcoin was even trying to sustain itself at 30,000, and it's now 20,000 because
Now, I guess now it's around 22.
I mean, it's very,
Yeah, somewhere around that. Yeah.
but that this was a snowball effect, and you know, a lot of billions wiped out. But if you look at the entire scheme, right, genius of it is that you can't put the blame on Do Kwon.
Oh no, of course not.
You can't put the blame.
Of course not.
He's
Of course not.
he's a poor guy. Although some people say he sold off enough of his Luna, enough of his UST.
Before the crash?
Well before the crash, must be. But you can never find out because it's all anonymous and crypto wallets are not tracked to any names.
See, that's why I'm talking about making the world a better place. So many companies, every Silicon Valley company wants to make the world a better place, but it is Do Kwon who did it. Not just Do Kwon, collective Web3 bros, the Web3 world, the crypto world, the holders. They made the world such a better place.
Yeah, you could make so much money and you could come back more.
And then he just started another one. He started Luna 2, right? What happened to Luna 2?
People are investing in it.
Oh, it's still going on.
Yeah, they're waiting for to lose their money.
So I've been following Web3 for quite some time, and I've seen so many smart people believe in it. So many people changing their profile names to .eth. I absolutely don't understand what that is. Why would they want that in their name? But anyways, so many smart people talking about it. Andreessen Horowitz creating a separate fund for it. A lot of investors investing so much money in it. But the one question for which I've never found a solid answer is, how can this technology be used? What are the applications? What are the applications of crypto and blockchain technology?
So you can do whatever a Web3 app does, you can build it today.
Using Web2, the so-called Web2, the normal client server.
Using common sense and simple techniques. Whatever Web3 does, you can do.
So if you guys think that we are missing out on some point, just drop a comment below and please tell us what are the applications that crypto fulfills and where can it be used? What are the use cases?
So first, let's look at this video of a man.
Okay.
It's a great man.
Hey, hey, hey. Hey, hey, hey. Hey, hey, hey. What's up, Big Connect?
Is he saying BitConnect or VConnect?
BitConnect.
Okay.
BitConnect was the the OG kind of the application where people again made money. Yeah. So in this case, why the guy screaming on stage is the only way the BitConnect scheme is gonna survive is by bringing more people into it. So you know what it's called, right? It's called MLM. So if he brings more people into the BitConnect protocol, then more and more people are going to lend and earn in BitConnect, and that's how the coin's value going to be up. So he's at a conference. So this is the OG scheme that started, and of course this was gonna just crash someday because every MLM scheme gets crashed, and the founder was also jailed. It was a small scam. It just 24 billion.
Also, the founder was jailed.
Yeah, the founder was.
Also, the world wasn't a better place
It
then.
wasn't a better place. Then.
This was 2017, 18.
2015, 2016, 2017.
Oh, the world wasn't a better
Not
place
a
then.
better place. So even after this, there were applications of ICO rug pulls.
Okay.
So ICOs were places where, as you said, you could create a blockchain, you could create a crypto, like say Monkey Coin,
Yeah.
and you can have investors invest in that.
Okay.
So they'll give you their crypto in exchange for that Monkey Coin, and you're supposed to launch. So this
They're
is
going to
like
give me crypto, or they're going to give me dollars?
crypto. I'm going to give you crypto. So
But noted crypto, like
like a
Bitcoin,
Bitcoin or Ethereum,
which I can definitely go and
trade on an exchange. But your coin is
and
not.
get dollars.
But your coin is not on an exchange yet.
Of course, because I just started. You have to give me some time.
I'm giving you funding to start.
Yeah,
So
of
I'm going to
course.
give you that. So you are going to make this coin and you're going to put it on an exchange. And when it comes onto the exchange, I'm going to exchange it for USD or UST, and I'm going to profit.
So what did these guys do?
So a lot of these guys started, and now in this case, this is interesting, right? When you are doing an IPO, right? Or if you're a VC who's investing in a company, you know who the guy you're giving
Of
to.
course, yeah.
There's a KYC, there's a process.
There's a due diligence, yeah.
Here, the transaction is between one crypto wallet to another crypto wallet.
Mm-hmm.
So who's sending and who's receiving is anonymous. So the anonymous you send to can just disappear tomorrow, and there's nothing you can do about it.
But when I'm investing in the project, I would try to make sure that there are legitimate people who are running it, right? And what are these projects? Like, okay, I understand it's a project, but what is the project?
Simple projects. Let me
What do they do?
The top 10 ICO rug pulls, which are like really, really, really interesting ones.
Okay.
So let me show you a list of them. So first one.
So by the way, DeFi is decentralized finance, right?
Yes, DeFi is decentralized finance. So let's look at one, which was a 4 billion rug pull. So someone was called the crypto queen, and they created something called the OneCoin. OneCoin, they said, as per the founders, in 2 years nobody will be talking about Bitcoin because OneCoin will replace Bitcoin, and 4 billion was what investors invested into it. So they sent crypto to anonymous wallets from different countries. And
how was she able to do it?
At that point, she was called the crypto queen. I don't know why. And she was able to persuade. I mean, she's a queen, absolutely, because she was able to persuade investors to invest 4 billion. So
Of course,
definitely a queen.
Another Elizabeth Holmes.
Exactly. And then they just disappeared. So, and I think there's something called.
Wait, OneCoin. What did OneCoin do?
It was replace Bitcoin.
That's it. That's the only agenda.
That's the agenda.
Okay.
And that's why people gave it 4 billion.
And don't ask more questions.
And because in 2017, you have to remember that everybody wanted to buy the next Bitcoin.
Yeah. Oh yeah. Oh yeah.
You have to remember that in 2017, everybody wanted to buy the next Bitcoin.
Oh, yeah.
So if you launched a project which is the next Bitcoin, so in 2017 it was simpler. Later is when they came up with NFTs and Web3 because it was not simple anymore. In 2017 it was very simple.
Oh yeah, because they had to get a little bit creative.
Yeah, just launch a coin and say it is the next Bitcoin. You get investment and then you just disappear.
So she disappeared.
Yes, she disappeared.
Was she caught? No, I think she was caught, right? No.
Yeah, there was some of them were caught, some of them were not caught. So some of them were clever in a way where they never even revealed themselves and still got people's money.
Anonymously.
Anonymous. They just create a website and address and they don't reveal themselves. That also has happened. So
she's most wanted.
Yeah, she's not caught still. Yeah. I mean, 4 billion, you can go anywhere in the world you want.
This is awesome.
So this
is awesome. I mean, she's a mastermind.
I mean, in 2017, it was very simple, right?
She's a mastermind.
Yeah. I mean, a lot of people are mastermind in this. She was bigger. She was the biggest 4 billion, so biggest of them all.
Okay. Feminism.
But 2017 was a simple era where you could just create a coin and call it the next Bitcoin.
People didn't ask many questions.
Not many questions. You just create a coin, call it the next Bitcoin, and you can make millions. But when the first ICO era went, when enough people lost money, they said, "No, now show me the use case."
Oh, so they asked that. They asked the question of show me the use case.
Show me the use case.
Okay.
and that is where come in NFTs.
NFTs, my favorite subject.
If you heard of the guy who paid 2.9 million for the NFT of Jack Dorsey's
Jack
tweet,
Dorsey's tweet. Yeah, it
and
crashed to zero, right?
yeah,
Nobody wants
he
it.
lost all of 2.9 million.
I mean, of course, nobody wants to buy it because I can go to twitter.com right now and, if I have enough patience, I can scroll down to Jack Dorsey's account.
Tweet
Yeah.
and
Or I can pay $50 to a college student and he'll scroll down for me and he'll find that tweet.
so here's
I can just Google the tweet, I guess.
so here's a small infographic. I'll show you what NFT means.
So by the way, NFTs are the mentally ill monkeys that you see. Those are NFTs.
So what does an NFT mean? So think about there's a Mona Lisa painting, okay? So right now the Mona Lisa. I mean, I know you hate Mona Lisa painting. So think
Simple question. How many Mona Lisa paintings are there in the world?
one.
So why does every NFT project be compared to another Mona Lisa?
I'll tell you why.
I don't think the layman even knows another artist or a painting, right?
Yeah.
Like, can you name 5 paintings? But everyone knows Mona Lisa.
Yep.
That's it. Okay, probably Andy Warhol's artwork is probably famous, but so every Web3 guy that I talk to, when they talk about NFTs, they bring Mona Lisa into picture.
So
And they compare their NFT project or their JPEG or their PNG to Mona Lisa.
let me explain to you why. So think about the Mona Lisa painting, okay?
I-
Who has it? Who has it? The museum has it.
Love
Okay?
music, yeah.
The museum has it, and it's the real owner of it. Who gave it the ownership? The government. It has a bond which
Mhm.
says that it is the rightful owner of it, and if someone tries to steal it from that, then the law will come in and
Because it's a
protect it.
physical entity, right? Yeah.
Physical entity.
And it has to be stored, it has to be
and,
protected
yeah,
from
and
vandalism.
protected by a physical contract. So someone from the outside world has to access the Mona Lisa painting. They have to go through the real owner.
Yeah, of course.
And if they try to steal it, the law authority is gonna kick your ass.
Yeah, but still people dressed up as old women can throw cake at it.
Yeah, you can try that. You still get your ass kicked. But in the NFT world, say you created an NFT.
In the NFT world, you can't throw cake at it.
Yes. You can't. Then that's a USP. So in the NFT world, you have a Mona Lisa painting, and say you are the NFT owner, okay, and you're standing outside the museum. I can go walk past you and watch the Mona Lisa painting, take a screenshot of it, take a photo with it, and go out. And if I try to make an NFT out of it, nobody can stop me. This is what it means to have an NFT.
Okay, so let's say I can take this Coca-Cola can, create a picture of it, and then mint an NFT of a Coca-Cola can.
So if I steal it from you like this, okay,
Okay.
and you go to the cops and say I have an NFT of it, they're gonna just throw you out. But if you had a legal contract of this, which said this is yours, and if I steal it from you, then the law can prosecute me.
But you can't steal it from me, right? You can't steal the NFT from me.
So I mean,
No, this is on the blockchain.
that's not on the blockchain.
It's on the blockchain.
So good luck putting your Coke can on the blockchain. Good luck putting your land on the blockchain.
Not land, but see, I mean, yeah, you can create an NFT for
You can create
the
an
bike.
NFT.
You can create an NFT for anything, but most of these NFTs are probably digital assets, right? Where digital assets or tickets
Yes.
to some event. But I've always thought, let's say Gary Vaynerchuk, right? He created We Friends because he wants to become Disney. Just created characters out of thin air, and then now in order to create demand for these entities, so when Disney created characters, the characters had a purpose. The characters were telling stories, and that's the entertaining use case for people to consume those stories of those characters. But now when Gary Vaynerchuk, he creates these characters, and then okay, they're decent. I mean, he drew them really well. But in order to create demand for these characters, in order to create some interest around these characters, he's again selling tickets to his conference. I mean, why do I need, like, let's say I'm an event organizer. He's an event organizer. Gary Vee is an event organizer. So if I'm an event organizer, is there no technology available today where I can sell my tickets?
It is. It is. It's called.
So why should I buy an NFT to get ticket for an event? And then once the event is done, what happens to the NFT? Okay, they give me 3 years access and I can sell it on secondary market. But why would this sell? Okay, because there's limited access at some point, so it's just like, so okay, now I get it, right? So what's happening is that I printed limited tickets and I created a lot of marketing buzz around it. And now there are more people who want to attend the event than the number of tickets. So people who have bought the tickets can
Sell it.
yeah, no, they can sell it, but it's not like the black tickets that we find outside cinema halls.
It's pretty much sale.
No, but there's dignity in it
It's
because it's
dignity.
allowed.
So what you could do is
So black, like I was tempted to sell black tickets, but I can't do that because there's no dignity in it. But here, there's not only dignity, but there's MLM attached to it because every time a secondary sale happens,
it increases. So
yeah, and the profit goes to the first person who minted it.
you could create that too. But the reason why this NFT will be created is, as who said it, you can take this and you can take out a loan on it. You can't do this on a real ticket. You can use this as a collateral because it's a digital asset.
So what? No, for it to be certified as a digital asset, there should be enough people willing to buy it at some price.
I mean, I'm a crypto lending platform and I don't need any certification. I'll take an NFT and give you a loan.
You'll give me a loan.
Give me an NFT, I'll give you a loan.
And what happens when what happens when I don't return the money and you try to sell my NFT on the market and nobody is going to buy it?
That's my investor's problem, right? I mean, who's gonna lose money? The guy who gave me money. I'll block my withdrawals. I'll block my withdrawals.
Oh my God.
So something very important about NFTs that these guys don't realize is having ownership means enforcement, and putting something on the blockchain does not give you the power of enforcing your ownership. If you have a legal contract with the government, you can enforce it because the law gets behind you. The law is the physical power, the military power of the government of the country. It gets behind you to enforce this ownership contract. And the law is not going to accept NFTs to enforce your ownership. So you can write whatever you want on the blockchain. You can say, I own the fucking parliament, but you don't own it, man, unless you have a written contract from the law. The only thing that enforces ownership
Okay,
is
so-
law, legal.
So there's a use case for the technology then, because let's say I have a land document that I own a piece of land, and now I put it on blockchain, and someone steals these land papers, like how you see in the movies. Someone is trying to kick my ass and take my land papers. So I can go to the government and knock the government's door and say, hey, you know what? My papers are stolen. The proof is I've got an NFT. That's a valid use case. Right?
Which blockchain you got? Ethereum?
Okay, whatever blockchain, yeah.
I'll write it on another block. I'll write it on Bitcoin. I'll write it on Polygon. I'll write it on something else.
Oh, so you want to kick my ass, take my document, and you can mint another NFT on another blockchain?
I can mint an NFT on Ethereum itself.
Sure, but you are going to mint that after you take my document. So there's the date associated with the creation of that, right? And chronologically, mine comes first.
So
You can't backdate on the blockchain.
I
you
can't
can't-
backdate on the blockchain, but the land papers itself, I can say I had them first. This guy went and minted the NFT first. I minted it later. Because who issues the?
Oh, so let's say, okay, you don't even kick my ass. What you do is
I'm gonna say is,
forget about someone who has the land papers. You are someone who doesn't have land papers,
yeah,
and then
I'm gonna.
there is someone who has a certain piece of land, but he doesn't have it on the blockchain. So you mint an NFT today.
I don't need to mint an NFT. I mean, say you have your land and you minted an
No, I'm
NFT.
just trying to see.
I'll explain to you.
See, every use case that we are trying to achieve over here is we have some solution, and so we essentially have a hammer, and we are searching for nails.
Yes.
But this hammer isn't able to, find any nails. And I'm desperately trying to search for at least one problem for this solution.
So if you thought like all land documents forever were being written on a digital database, then you wouldn't have this problem. You don't need blockchain for that. You don't need blockchain for that. You literally don't need blockchain for
No, but let's say, okay, no, the point is a digital database is you can change it, right? You can edit it, you can update the document.
You
But
can edit blockchains also.
okay, but with the majority of them accepting that edit.
Yeah, the majority who
it's-
control the stake, who control
it's-
the power of
It's
their
more difficult. So the more I think about it is, I think it makes more sense if the government uses blockchain. And then it just throws out the question of decentralization.
Why do you need blockchain then? So that's the question we're going to come to, right? So let's look at, I mean, how does this thing even work? Okay.
Okay.
Maybe that will answer all your questions. So let's look at the Bible of blockchain, or the DeFi or crypto, which is the Bitcoin white paper. Let's look at a simple.
The Bitcoin, this is the OG of the OGs, right?
OG
The
of the
Bitcoin.
OGs. So first things first, whatever the Bitcoin white paper used, the blockchain concept was invented in 1990s.
Okay.
It's not the first of it. It used something called proof of work for consensus, and this was also not new. This was known much before that, 1960s, 1970s. Cryptography has existed forever. So whatever Bitcoin white paper states is not what it uses. It was not something they invented first. They didn't invent blockchain. They didn't invent cryptography. They did not invent consensus protocols. They made use of that to solve a valid problem.
What is that problem?
A valid problem. So say you and me,
Okay.
you in India and I in USA want to transact.
I think you have to say this louder. Everyone has to listen to this because this is the origin point.
This is the origin point.
This is like the Big Bang. This is like the Big Bang of
this is the Big Bang of Web3.
And I think you should emphasize on this because I've heard from you. I've heard this story from you. I know that it's incredible the way you put it. So yeah.
So I mean, it's incredible the way the Bitcoin white paper puts it, right?
Okay.
They want to create a peer-to-peer electronic cash exchange mechanism, which is immune to fraud.
Mhm.
So they want you to transfer money to someone anywhere in the world
Okay.
without you being able to take that money back. Say you want to pay for a service, but after you take the service, you take the money back. You want to create a mechanism
But there are mechanisms
where that is not possible. We'll come to that. Like the thing is, like banks can reverse transaction. So it's not practical. In the practical case, it's very rare that happens unless because the banks are controlled by the governments and then the law, do that. But in theory, they could do it. So the Bitcoin white paper attacks this theoretical problem because once you have a centralized entity in control of a mechanism, then they have the power to reverse. So definitely banks have the powers to reverse a transaction. Say you are in USA, I'm in India, and you are transacting, and you send me $10. It's possible that in the pathway, the banks can reverse the transaction and send you back those $10. But they may do it because of some kind of defrauding mechanism in the between. But for you to be able to influence a bank to do that in a practical case is not possible. But let's say that this is a theoretical case.
Yeah, on paper they can do it.
On paper they can do it. So if you and me want to transact, there are like 3 ways we can think of.
Okay.
I go to my bank and transfer my money to you, and you send me the thing I want. This is a transaction. Or I pay you through PayPal or QuickBooks, and you transfer me whatever I want.
Yeah, we maintain the records on QuickBooks.
Yeah. Or you travel in person and we transact in person. Like that's another option. The only thing is in all these cases.
So that is like I'm coming to New York City and I'm having a wad of cash with me.
Yes.
And then I'm giving it to you there.
And you are exchanging for whatever goods you want.
Yeah, sure.
So this is the most safest one. So even by what Bitcoin white paper calls it, cash is the true decentralized way. So if you think about all the other ways, there is a central entity which can reverse the transaction.
Right.
But if you transact in cash, there is no central entity, so the problem does not exist in cash.
Right, because it's from my hand to your hand.
Yeah, the problem does not exist in cash, and this is written in the Bitcoin, but for the Bible
The Bitcoin white paper.
The Bitcoin white paper, the Bible of blockchain, DeFi, Web3, and all. So
the Big Bang, the origin.
The origin. So the problem is not about dollar or inflation or everything these influencers talk about. It's about in an electronic system there is a way where it can be reversed, which is what it's trying to say. There is a way you can prevent it. Although if when you bring it to practice, we'll see the challenges about it. But think about it, like if you're transacting through the banks, so the bank has a ledger. There's a bank, your bank has a ledger, my bank has a ledger, I have a ledger, and you have a ledger. There's 4 ledgers which have to be in sync.
Of course.
Which have to be in sync for to show the right record of transactions. Or you could go through PayPal and QuickBooks, and there's a single ledger which has the transactions. But now you go to trust QuickBooks or PayPal to maintain the right right ledger record, right? We trust them to. It's not a real problem, but say you want to solve this problem where you don't want to trust this intermediate entity to maintain the ledger.
I don't trust anyone.
You don't trust anyone, right? You don't trust anyone. So Bitcoin white papers comes up with this mechanism, right? Where if they say there's a pool of actors who will do this job of maintaining a ledger for you. So it's kind of shared ledger, which any of these guys can update. But who gets to update is not decided pre-hand. So if one of them acts with malice and wants to change anything on the ledger, they just will not get the chance to do it. And that is ensured by something they call the proof of work. So if he wants to make a change to the ledger, they have to solve a cryptographic puzzle, and they have to be the first among all the actors to make an add a transaction to that. So the way the entire network works is there's a pool of transactions. So I sent you some some money, and that's a transaction, and you sent to someone, that's a transaction. There's a ton of transactions that were submitted to a pool, and these actors have to update this in a ledger, which is a shared ledger amongst all, and it's a ledger anybody can see.
And that's a
public ledger, and that ledger is connected in form of a blockchain. So the blockchain allows them to see what was the last update and append to it.
Of course.
So the only way they can add a transaction is append to the last transaction. They can just not start new register with a new data. They always have to append to the last block. So that makes it, you cannot delete what was previously there. So this one is actually decent because now you've created a ledger which cannot be, you cannot delete transaction. It's immutable. And there's no central entity in play who is who can change the ledger at will. They've got to compete in a cryptographic competition to be able to update the ledger. And the problem is they have to spend some effort to make a change. So they have to invest in the ledger itself. So if they make a wrong change, people may lose confidence in the ledger and they will not use it. So this entity which is controlling the ledger it has a very low reward to perform this risk of making a change to the ledger. But
which entity? The collective group of decentralized actors.
If anybody wants to achieve that, there is a very low reward for it. But here you think about it, right? Now you've created this decentralized mechanism where I can update all this. But here's the problem. How do these actors who are maintaining this network, what is their incentive to be honest and to do this? So I'm saying they're spending some effort, right? So they've got to have a reward.
A lot of GPU.
They have got to have a reward to keep this up. So if this reward is in US dollars, right? If I make a transaction and I have to reserve that in US dollar for this actor to maintain this ledger, then the problem is it again goes back to that guy having to transact the US dollar. There has to be somewhere you maintain all these US dollars. So you have to bring in another third party into the picture.
Of course, because someone has
which will maintain the pool of US dollars and pay these actors.
Exactly.
So you lose all the benefits of this decentralized ledger because the third party becomes.
And I don't want to trust them.
It comes in de facto control of the ledger.
We don't trust anyone. Right? We don't trust anyone.
So that is why the Bitcoin white paper says this network will use something called the Bitcoin, and this ledger records transactions of the Bitcoin. Now nowhere it says that this mechanism is supposed to replace the dollar, or this is the next world currency, or this solves the inflation problem. In fact, In
So
fact,
the paper doesn't talk about where the value for Bitcoin comes from. I think that it talks about the limited supply of Bitcoin.
it doesn't talk about limited supply.
It doesn't talk about
This
limited.
is the biggest fallacy. This is the biggest fallacy. Nowhere on the paper. So we could go right live. Let's go to the Bitcoin white paper.
Let's open the link.
Let's open the Bitcoin white paper. This is the biggest fallacy that you
So the
hear.
Bitcoin white paper doesn't say that there has to be a limited supply of Bitcoin, which
No.
is continuously harped about by
There is-
every single person who believes in Web3. Every single
We're
person
showing
who's like
you
a crypto.
the control F on the Bitcoin white paper. There is no word called limited supply, and there's not even a word called limited. There's a word called unlimited, which is given for an example.
Okay, no, search for 21 million, because that's what they say, right? That is it 21 million?
It's 21 million, but there's no 21 million.
So who came up with this 21 million?
So here's the thing, right? If you go back to this problem of maintaining the blockchain, the way the protocol was constructed is every time an actor adds a block to this chain of transactions, he gets rewarded with some Bitcoin. Okay, and he gets rewarded with some transaction fee. All that the paper says is, if you run out of supply of Bitcoin, then you can reward them with the transaction fee, or you could create infinite. So it does not mention anything about the supply. This is, up to your choice. It's the point when they try to implement it, they made an arbitrary choice. Okay, we make it fixed. You could build this entire thing with unlimited supply of Bitcoin. There's nothing. So the entire thing you hear about Bitcoin being limited in supply and it's going to solve the inflation problem is a narrative by the influencers trying to sell you.
No, but it is also how it functionally works, right? So the first commit towards creating Bitcoin, they've incorporated it, and obviously they're anonymous right now.
That's a random choice. There's no rule for it being 21 million. It can be infinite, and that's why.
So what was the logic that we keep hearing about is, let's say if it is 21 million, there's limited supply of Bitcoin, and if there's limited supply of Bitcoin, it somehow magically becomes gold. But first of all, I don't understand how it becomes gold. Maybe because I'm a puny mind.
Yeah, exactly. Exactly, our puny minds can't understand it because it just influences logic. But if you go by the Bible, the Bitcoin white paper, it has value because you have to solve this cryptographic puzzle. You have to expend this electrical energy
for which I'm paying in dollars.
For which you're paying in dollars. So to mine gold, you got to pay in dollars. So if you mine Bitcoin, you got to pay in the power.
And what am I going to do with this Bitcoin? So see, the white paper says that Bitcoin is my reward, right? Okay, I got the reward. What am I going to do with this reward?
That's not the problem of the paper. It's an academic paper which solves an academic problem of how to do peer-to-peer electronic cash over the internet without it being reversed. It does not tell you how to create demand. It doesn't even tell you to implement it. Okay, it's just a solution to a computer science problem.
Okay, but let's just roll with it, right? Let's just try to give them the benefit of doubt, and let's just brainstorm. Like, okay, now I've got Bitcoin. I've done a ton of work of recording, these transactions on ledgers and etc. And I've earned myself a bunch of Bitcoin. And just like me, there have been several miners who have earned their Bitcoin, right? And what are we going to do with it? Like, can we go buy groceries? Well, let's say if we go buy groceries, there has to be a retail store who accepts Bitcoin and gives me real goods. So there has to be a comparison with dollar. And once there's a comparison with dollar, there is going to be an exchange rate. And when there is an exchange rate, so Bitcoin will have some sort of value, and the value will fluctuate because market forces, right? So I think it is useful, right?
So here's where you're coming.
The only thing is it's unstable, but it is useful.
The contradiction, right? You are confusing with the reward and thinking that now I created something digital which you have to expend energy and you get coin it's got to be money, but that's not what money is. So think about it, like why we created money. Money is a form of exchange for goods and services in an economy. Okay, it's a standard way to mediate.
Sure.
Now, say you created Bitcoin in this form. This is what happened with crypto, right? Someone created Bitcoin, and someone created some other coin. Someone created Litecoin, Dogecoin, and whatnot coin. Now, which currency is supposed to be the money? How can there be so many of them? That's the exact reason we don't have private money. Private money is is not how money is supposed to work. Not everybody is supposed to print money. It's got to be some power that we give.
No, see, the other cryptocurrencies are minting their own money. They have the option, but Bitcoin doesn't print their money.
Someone created a protocol, they launched it, it's called Bitcoin. That you could implement the Bitcoin white paper and you can create another coin.
Yeah, but it's not widely accepted. See, it's the question.
Why should someone accept a privately?
No, only if it is widely accepted, you create trust out of it. You know that there's going to be a vendor, there's going to be a retail store who's going to accept my
Exactly.
money, right?
Good question. Good point. If enough people accept a form of exchange, you can call it money.
There are tens and tens of millions, hundreds of millions, or tens of millions of people who are holding Bitcoin right now. So my problem
They're holding it.
my problem with Bitcoin comes there of holding it. I am a 94-year-old retired veteran, and my great grandson has told me about this fascinating concept called Bitcoin, and he told me that it's good if I buy 2 million of them. So out of the 21 million, I just buy 2 million of them. It's 2011, okay, and I buy 2 million of it, and then I die.
And you die.
And nobody
The Bitcoin
has
also die.
no, and nobody has access to my Bitcoin.
Nobody
What
else.
happens then?
The Bitcoin also die. They're gone. So this
They don't die. It's just subtracted from the total pool.
It's not there. It doesn't exist. It's not subtracted. It's not there. Those coins are there, but it's out of anybody's access.
Exactly. So it's not gold, because let's say a
not gold.
grandmother dies with a ton of gold, the daughter takes it, and the gold is propagated through generations, and the gold doesn't lose value. But over here, overall, let's say Bitcoin is a representation of wealth. Wealth of the world is getting decreased as and when people are holding more Bitcoin and not and forgetting their keys, or forgetting where their if it's on a drive, forgetting that.
So you raise a very valid point, right? Why should I even accept Bitcoin or buy Bitcoin? So let's go by the entire Bitcoin white paper itself and say, go by the influencers and it's a decentralized money, it's outside dollars and whatever. Now, how am I supposed to store Bitcoin? Either I use a wallet service, which is provided by a third party, or I use a hardware wallet where I store my Bitcoin. But if I have
No, it's not storing a Bitcoin. Is it storing a Bitcoin, or
Yes,
it's an API that I'm consuming to know how much Bitcoin I have?
that
No?
if you're doing the API part, then you are
Then I'm fine. Then it's centralized.
then you have to query it through third-party service
Of course.
providers. Who's hosting the whole Bitcoin? Because it's a shared ledger. You see, the third-party service provider will be one of the actors who is holding the shared ledger. So you are going to go through him, but then again you are going through a centralized entity.
Yeah.
But
Mm.
that's your one way if you want to have easy access, or you have to have your own hardware ledger, which if you lose the keys to, you lose your money. It's not like any other form of money where you can safely keep it. If you forget your keys, your money is always gone.
And
this
not
is
just gone from me, but gone from the world.
Yeah, and now this is the exact problem. This is why nobody is ever gonna accept Bitcoin. Is if I want to do it through decentralized way,
This is very inefficient, very
stupid and inefficient, and that's why nobody's gonna accept it, because
Oh no, but we are stupid. Our puny minds are not able to understand.
yeah, nobody's gonna ever use it for this prime reason, right? If I can't keep it safe, and if I can't recover if I lose keys, that's not how I want to keep my money. Now, if I want to have it in a simple way, then I want to go through a third party service provider. That defeats the entire purpose of decentralization. And if you look at what the Bitcoin white paper is solving, it is solving and distributing
Peer to
solution
peer
in a deep
transaction.
first of all, transaction, and nobody's transacting in Bitcoin, by the way. Everybody's just holding it. Even if you take away that, even if people are transacting, right?
No, people are paying Bitcoin for some activities.
Barely anybody. maybe less than 1% of Bitcoin volume is for that. But even if you agree with that, that you transact in Bitcoin, the only way you keep it decentralized is if you do it in a very inefficient way.
Sure, but okay, forget about decentralization.
If you forget about
Does the technology have any merit to it? Like, let's say if the banks use not Bitcoin, but blockchain.
come back to the same block diagram. Let's go back there, right? If you remove decentralization, why do you even need to do that? That's the solution we already had. That's what QuickBooks and PayPal are doing. There's a single
No,
ledger.
but how do I trust them? See, it's about
So
right now I'm trusting them because I don't have another option.
Yeah, you can create a shared ledger. It can still not be a blockchain. How blockchain is a public ledger. If the technology only has merit for public ledgers.
Okay, so yeah, because of anonymous wallets.
Yeah, you can keep it who's sending to whom anonymous. You can keep that anonymous on PayPal or QuickBooks also. The point is that the ledger, the decentralization is what is the USP that comes in with blockchain. If you remove that,
the decentralization, they're striving for it because they want it to stay immutable. They want it to stay untampered.
Yeah, if you remove
and
that,
not in the control of any fraudulent middleman.
Yeah, and as you see it can only work in decentralized if you keep it untethered from the fiat. If you want to do that, then you got to create your own economy with your own coins. And that's how the Bitcoin, Ethereum, everything come in. But here's also the fallacy.
And
right?
that's also the blog article which you wrote, right?
Yes.
If humans are on a new planet.
You can read that in the link below. But here's the thing, right? How does Bitcoin work? Who has the more compute power? He has the control of the ledger. How does Ethereum work? Same. How does a proof of stake mechanism work, which is an alternative to what Bitcoin and Ethereum do? Who has the most stake? He has the control of the blockchain. So eventually, if these ledgers become important, important people will come in, and then they will
just buy it out.
They can buy enough power, they can buy enough stakes.
So that should already be happening right now then.
Because it's not important, no, they're not getting it. So why are the governments not getting it? Why are the big guys not getting it? Why is Warren Buffett not buying? Because they know this is shit.
Because they're boomers.
Yeah, they're boomers. But it literally is not solving anything, right? They know eventually it's going to become a centralized database. And if it's become a centralized database, the way it updates itself is just inefficient. You already have centralized databases which work better. So Bitcoin right now is just 3 companies holding most of the mining hash power. Ethereum is similarly decentralized. So
why do they go on about yeah, of course, I mean blockchain or crypto, this is absolutely, they don't solve the income inequality, democratizing. You see all of these words coming again and again in any of these crypto or Web3 projects, but they actually don't do that, right? I mean, like you said, let's say if 3 people have complete control over Bitcoin mining, it's it's not creating a new world. It's just creating another form for the haves to exploit the have-nots.
Yes, exactly.
And I'm not against it.
But I mean that's the thing, right? So if you bring blockchain and this concept of Bitcoin white paper of decentralization, that's what you see. If you bring that concept to match with reality, it becomes centralized because we want efficiencies. We don't want we want efficiency. That's why things become centralized, because when things become centralized, they become efficient.
Of course.
And that is how economics function. We're looking for efficiency.
Not just economies, but everything. I mean,
think about this.
Talk about anything and people are asking for decentralization. But the whole point about how centralized systems came into existence is to solve certain problems that were in the world.
So let's look at the use case of these guys saying we'll build the next Web3, which will replace the current web, and they'll build this on the decentralized web databases. So quick thinking about this, right? How could you do that without someone like Amazon and without something like AWS? Because Amazon has invested in large acres of land and they have this huge data centers with GPU-based servers to give you very quick access to servers, very quick response times. How are you going to do this without someone like them? And if you don't do it without someone like them, it's not going to be decentralized. And if you want to maintain a internet which is of the scale of today, you need data centers You need data centers which are placed together so that you can, run an app at once, distributed on multiple systems. So that's how you can maintain efficiency. Even if one server goes down, you can run the other one. All this can only happen if all of them are working together in a data center farm. How would you do this in a decentralized way? I mean, like you host one server here and one server in someone else's home. It's not even practically doable. I mean, I don't know if these guys even thought through it. Like, it's not even physically possible to have internet without things like data centers, which Amazon or Google maintains, and you're never gonna go do away with them.
So I mean, I don't think it's something like the Silicon Valley use case where people are saying that literally, like physically, they're creating a new internet. But I think what they mean by it is a new, Web3 is a new era of internet.
Yeah, I know what they exactly mean. They mean you own your data. I know exactly what they mean. That's what they say. You own your data. Okay, let's look at it. How,
You not just own your data, but whatever these companies are using your data for, imagine you being able to get a cut out of it.
yeah,
That's what people see. End of the day, people want money.
then they want to give you. So again, at the end of this, you don't need blockchain and crypto for this unless you
No,
want.
blockchain and crypto will. It's sort of like an enforcer. Like
Yeah.
Amazon by themselves, they won't get or Facebook by themselves, they won't get philanthropic and say, okay, hey, you know what? We've used Vishnu's data and we've earned $20. Let's give him $2. They're not going to do that. But if there was something like a smart contract which enforces the entity to do it,
Yeah, good point. Right
but
now,
again,
now let's
but
go
who
about.
enforces the smart contract?
Nobody can enforce a smart contract. So let's go up.
So it automatically has to work. It
Yeah,
has to, it
yeah,
has to trigger that.
it will pay you in the crypto on which the smart contract is running on. So yeah, good point. So you can do this. You can implement a smart contract and make your people who are using your platform own their data and they get paid in crypto. Fantastic. Now here's the problem, right? You build one service which pays you in one crypto coin, and someone else is building another Web3 project which uses another crypto coin and pays in another one. So first you come up with a standard at least. So use one crypto. Okay, at least you can get on the bandwagon then and say all this is gonna work with one crypto.
Yeah.
Because if you say there are thousands of cryptos and thousands of Web3 projects going to use thousands of cryptos, you're taking us back to the barter system. We don't want to go back there, man. Like the entire reason we invented fiat or a single form of currency is because you want all transactions to be happening in the same medium. You create thousands of cryptos and you want to build services on this, and each service will work with its own crypto coin. I mean,
And when I'm exchanging these crypto coins, I'm constantly checking, okay, how much of this is worth my fiat money? And then, okay, if this is worth this much of my fiat money, then I can purchase this stand or this thumbs up can.
How is it?
So I'm constantly referring again to fiat money, right?
Yeah, I mean,
So I think the ideal state for this crypto land is where fiat money just vanishes.
even if it vanishes, so you want me to go back to barter system? So I use search engine. I pay in some search engine coin. I use social media platform which is running its own coin, so I got to pay in that.
Yeah.
Are you making my life easier or are we making it more difficult?
No. So their concept is making things a little difficult is fine as long as you have control and you have some equity over it, versus just giving it all up to Mark Zuckerberg and the Bezos of the world. Me personally, I don't care.
I mean,
I love capitalism.
I mean, Mark Zuckerberg's built a platform for you to socially interact, and he's making money out of it.
No, people don't care about how he got there. Once he got there, he's the mega villain.
So
You
everyone started using Facebook for free. You started using Instagram for free. And now he's just using your usage data and targeting you with ads. He's built a business model. It's a profit business. It's basically a profit making business. It's not a charity business. So the USP that the Web3 guys sell is that you can create a smart contract which fixes the rules of the game, and it cannot be changed because it's on the blockchain. Now, okay, so let's play by it, right? Let's play by it. You created a social media platform which plays by these rules, which plays by the blockchain rules, which you wrote a smart contract and that is tied into the mechanism. Okay. Even if you do that, right, the app developer has all the powers to remove the binding to the smart contract and bind himself on a different smart contract because because there is nothing that enforces an app to bind itself to a smart contract. There's no binding like that because I am an app developer who's running an app on a server I own. So
And of
I
course,
can run it the way I want.
so it resonates with a little bit of cancel culture as well, right? People don't expect anyone else to make mistakes. So let's say if I'm an app developer, I made some bad agreements or bad deals in the beginning. Now, am I stuck with them? Why do I want to be stuck with them for my entire life? It just doesn't make sense. People expect free lunch. People expect free lunch, and people take these platforms for granted, which took years of sweat and energy to build. And instead of trying to understand the market forces, instead of trying to understand that nature is going to always change, right? And the business nature is going to change, the business environment is going to change, the rules of any particular app is going to change, the public behavior is going to change, user behavior is going to change.
Your point is valid about freelance, right? Like we grew up using Google for finding out information. Now the Web3 guys will build a Google, and if you really want it to be decentralized, right, then the only way to build a decentralized Google is every time someone searches for it, he's got to pay for it. Because if you don't pay for it, someone's got to pay for it, and that is
And I have to pay for it by exchanging my fiat currency to a cryptocurrency and then pay you through that cryptocurrency, which you are going to convert into fiat in order to buy anything.
do it. But you got every transaction.
So it's okay.
Yeah, the only way this decentralized internet is going to work is every move on the internet is transacted by every individual party. So there's got to be no third parties who are handling transactions at large. So what was Google doing? Google hosted a server where you can make searches, and it is providing a database with which it's giving you search query results. Now, in a decentralized world, okay, the database of search results is distributed across in a fictional world, not in a, it's not happening in the real world. So distributed across multiple houses and multiple people hosting this. So now, when you make this query, because there's no third party who is giving this free lunch, your query has to be routed to these distributed servers, and you got to get the result back. And every move of data is a transaction, right? So every move of data has to be paid by somebody.
No, I don't think they'll build it this inefficiently.
If you don't build it inefficiently, you need some intermediate third parties who are acting as bridges, and that brings you back to decentralization.
What about collective building? There's no central authority that is building all together. Like there's no central Voice Cube Inc. who's building it, but let's say a collective group of developers have come and built a system of smart contracts, which executes all of this instead of creating a new transaction for every
So
data transfer.
who services my request? So I raise a request on Google to say on this decentralized Google, I give a
So
search
it'll work just like how Google does.
I give a search query, so it
But-
hits an
but
API
no-
endpoint,
Yeah,
which is on a server,
yeah.
which has
Which is not decentralized per se.
not decentralized. It is
It's not decentralized, but it's centralized, but it doesn't have a central authority. So what I'm saying is there's no organization that controls that data, but a
Yes.
group of developers have come together and built it. And then because people know that these group of developers have built it, it has that trust.
Server has to be maintained by somebody.
The group of developers.
So it's still an entity which is maintaining. It's still centralized. Where is the decentralization?
It's not centralized because there is no CEO. These group of developers, like let's say a few of them can go, and a few others can come in, and then they can contribute to this project.
That's
Just
what
like an
Google is.
open, just
That's
like
what
a
Google is.
no. Google is not just that. There is a CEO that he takes decisions.
He is
Anybody-
not the owner. He goes out. Somebody
Any-
CEO comes in.
Yeah, sure, but let's say the values of Google, right? Like the values of Google won't change. Like
In this developer group, who makes the decisions? So you got to make a payment to the server entity for keeping the server alive. So this group of developers, they've got to take decisions. So they've got to still have a head. So they've got to make some decisions. So they've got to act. They still have ownership over this.
They might create like a constitution which governs or auto governs, makes the decisions based on certain rules.
And then the same guys will be able to override those rules. The same developers, the new brands.
Yeah.
So it's the same.
So it's a decentralized. It's a centralized. So it's centralized between a group of people.
It's exactly what.
But they don't own it.
It's what centralized.
They don't own it.
So it's got to be established in someone's name. The servers has to be established to a company's name. Okay, these developers are part of a company, so you got to assign the server to someone. Unless this is a decentralized server, unless you don't need to assign this to someone, you can use a smart contract and create a decentralized server established on decentralized systems maintained in each one's house. So it's I mean, it goes back to what Signal co-founder wrote, right? This is not going to work. It's not going to work. You cannot build an internet like this. The only way it works is now every single.
So have you read what Vitalik said about that?
What did he say?
I was just reading about it. So yeah. The CEO of messaging app Signal blasted NFTs and the blockchain-based internet known as Web3 as a gold rush in the blog post. And I think this blog was read by almost every Web3 guy.
Every guy who's over the word Web3 has read it, yes.
Yeah. It's a very famous blog, yeah. And people at the end of the line who are flipping NFTs do not fundamentally care about distributed trust models. Obviously, they don't care about it, and they themselves know that.
So what was Vitalik's response?
Yeah, I'm searching that down. Yeah. So what Vitalik said is Moxie's critics in the second half of the post strike me as having a correct criticism of the current state of the ecosystem, but they are missing where the blockchain ecosystem is going. So he says that he's claiming that Moxie is, he agrees, he concedes that the current system is bad, but he's saying Moxie doesn't know where the blockchain system is going. But my question is, who knows? Does Vitalik know? Who knows?
Does he say where it's going?
No, he doesn't say where it's going.
This is exactly like what their influencers say. Vitalik himself is an influencer, but
so the reason why Web3 hasn't yet lived up to its own ideal is due to limited technical resources and funding.
Which is not any that's going to make it inefficient.
So I think people would not be able to resonate with the Google search example so much. Can you frame it with another example? Is there another example where we can actually discuss where it's relatable to decentralized activity? Like social network.
It's the same. It's the same like for every post you make, you have to send the link.
So why should I pay? Why should I pay for every post I make?
Because
it's being stored in a database, right?
Right now,
and this database is the blockchain.
Let's take this. Right
now, is the database blockchain? Am I getting it right?
If you have to make it a decentralized, yes. So let's take the case of how Instagram works right now. So you post something, okay? Your data goes to the Instagram database. It stays there. And anytime anybody wants to see your post, they go to your profile, and that makes a query to the Instagram database, and it returns you the image. Okay, so all this is handled by the Instagram server, for which
they are paying.
Instagram is paying. And this is because Instagram is there as an entity which is supposed to maintain the server. If they go down, the server goes down and the data is gone.
Yeah.
Enter the Decentraland. The Decentraland is crypto itself. So let's not take
don't take the name of Decentraland because it's the metaverse.
Yeah. So let's take the kind of
metaverse is another topic.
Web3 decentralized Lala. Okay.
Okay.
So there is no Instagram. The server is hosted on distributed machines, for which people hosting them are getting paid. So everybody owns the internet. Everybody has a piece of the internet. They are posting it on their own server.
But it need not be everybody. There can be one entity who hosts a lot of computers, right?
Then that's Amazon. That's again a place. So let's not consider that happens.
Why would it happen?
That's what happened.
Why would it happen? Because it is the next efficient state, and the world moves from one efficient state to another efficient state that is then there's some delta to it.
Yes, exactly. If there is enough capital into it, so if there is enough way to profit into it, anybody like Jeff Bezos will put their
Any smart guy.
any smart guy will do that. So it eventually becomes centralized. So let's not go there. Let's say it stays decentralized. Let's say it stays decentralized, and there is no single entity who is maintaining the server. So there is a group of network of people like how the we talked about the blockchain, Bitcoin blockchain. So they have to get paid like a transaction fee. They had to get paid for mining. Similarly, people who maintain proof of stake blockchains, for every transaction someone makes on the blockchain, they have to pay a fee for it. So now, who pays the fee? Who's making a transaction on this blockchain-based network? You, the user, is making a transaction on the blockchain-based network.
By posting a picture.
Posting. So from where does the fee come? It comes from you. It has to come from you.
Not just me, but from all the users.
Because any user.
And as long
It's the only way you establish ownership for everyone.
so, but there's a fundamental problem to this, because once the cost of posting content increases, the amount of content decreases.
Yeah, that's not going to work. So let's take a simple
So-
example, the real world
The
example.
value, so automatically the value of the social network decreases because number of people who are
Let's
posting decrease. But will
let's take a more simple example, real world example, right?
yeah, so
Say-
maybe it can be something like, okay, I pay $45 in subscription amount, and for $45 I can post
So let's say
7 posts.
understand why this decentralization never gonna work, and that's why anybody who's got a sane mind can see you're never gonna be decentralized, because take your very existence. Okay, you are paying your government taxes to keep you safe. You're paying them to keep maintain the law, may give you security from some invading forces. So you position the central entity, the government, there to protect you from that and to maintain law and order, to maintain the systems. Now, say in this decentralized land, right? There's no central entity. The only way that's going to happen is everybody has to take care of themselves. So everybody has to deploy their own security.
So it's 10,000 BC again.
It's 10,000 BC. That is a decentralized world. That is
10,000 BC with internet.
Yes.
With internet that you have to pay.
Bring 10,000 BC to the internet. Decentralized internet. Everybody owns everything. Now, it goes back to the same thing. You will have to maintain your own servers. You'll have to maintain you have to pay for every transaction you make. It's not going to happen. In reality, it is never going to happen. You are going to have centralized third parties who are going to do the services for you. Because I don't want to do all the things, right? I mean, if I make a search query on Google, I want the result. I don't think if Google uses my data to do the ads, fine.
Yeah, because it's convenience, right?
Yeah.
Like it's giving you convenience, and
Give me the
you
option.
want the
Give
convenience.
me the option where I'll pay $0.0001 for every search query I make. And Google will not record my data. Nobody will get my data. It's totally anonymous. Versus the option where I can make a search query for free. Which option I'm going to take? Which option is anybody going to take? Making the search query for free. Do you think sane minds, except for woke minds, really care about where the data is going? No, we don't care. We want to get on with our lives. We want to find the data we want. We want to do something meaningful.
Unlike you, we are busy.
Yeah, then we are busy. We are not bothered about Facebook using our data and targeting. Except let them show me. And I'll ignore it.
No. No. I'll find this mic easier because I'm able to get the ad. I'm talking about you about purchasing mics, and I get an ad. I click on the ad. It's within my budget. I purchase it.
I mean, if
It's convenience. It's convenience.
tell me, how are you going to make a Web3 service which is truly decentralized, which does not involve any intermediate trusted third party to exist, without having the end user of your application to pay for every move he makes on your platform, without him having to establish a server on his own to keep your app up and running? Tell me, how are you going to make a Web3 service which is truly decentralized? You're not going to make. I mean, you don't have a cryptocurrency.
No, I think the question is they can probably theoretically, but an efficient decentralized,
Yeah.
a more efficient state. See, we cannot go from an inefficient state. We cannot go from an efficient state to an inefficient state as a system, because market forces won't allow that. I know that a lot of people would want to go there because their ideology of utopia is lying over there, but it's just plain nonsense.
I mean, how much work is out decentralized if it is inefficient? We are not going there. We are not going to decentralization if it is inefficient. That's a straight point, right? I mean, that's the point these guys don't get.
So, but I still, I mean, and there are smart people who are investing a lot in Web3, like Andreessen Horowitz, which is considered as the mecca for every startup in terms of venture capital fund. And Mark Andreessen himself struggled to explain a use case.
A single meaningful point across 40.
And did you read that? Did you watch the video?
I watched the video and in 45
And did you-
minutes he blabbered absolute.
So there's there's a Reddit thread about it. There's a Reddit thread about it.
He couldn't make a single meaningful point.
There's something that's related to us, because the example that he took is creating podcasts. So he says, okay, Web3 democratizes podcasts. Today it's such an impenetrable medium, right? Not anyone can make and release a podcast, and good luck finding a way to make money off it, right? So yeah, so it's so difficult to make a podcast. You know,
You need
let's say
cameras, you need mics,
you need money. I was listening to the video, waiting for him to come to the point, and I was listening to him, waiting for him to tell me, okay, how is Web3 going to make me as a podcast creator? How is it going to make my life easier? How is it going to make my life easier? I don't see any points in it.
There's no point, right? I mean, if you're a quality podcast creator on YouTube, you get views. On Spotify, you get views.
Yeah.
And
it's not like we can mint our own NFTs or we can create our own DAOs, because we have just started. And okay, let us say we are a popular podcast, and if we can mint NFTs and a lot of people will buy it, sure, but I don't need NFTs for that. I can sell my merchandise.
so here's the point. This is the good example. So if on today what's happening, if 1 million people watch my podcast, I don't get 1 million into something. I get something for the ads that I display on.
Which is also 1 million into point something.
Something,
Yeah.
yeah. But what the Web3 guys want to claim is that if you create this decentralized world, then the only way to view your podcast will be through access using an NFT.
So
People will have to pay to watch your podcast.
so there's this. Okay, cool. Yeah. So that
compared to YouTube where they can watch free.
and they say I can't do it right now.
You can do it right now using the payment gateway based app.
You know this guy, the comedian Andrew Schulz. So he's the first comedian, I guess, who's releasing his special completely independently on his website, and it has become a sensation in the stand-up comic world, because I think Netflix or probably some other streaming service, they wanted to cut some jokes of his performance, and he said, "Fuck you! My audience wants to listen to these jokes. You're no one who can censor me. I'm going to release it on my website." And then he released it, and I guess he made 3 or 4 times the money that he invested. So
He didn't use Web3.
he didn't use Web3.
And you have the internet is already decentralized. HTTP protocol is open to everybody. Anybody can build a website. It's not. It's absolutely decentralized. You can host it on your own server. You don't need to go to Amazon.
So this is
The reason you go to Amazon is it's easier. It's efficient.
no. I'm saying, is there a avenue to build decentralized protocols, like something like HTTP? I think is decentralized. It's owned by everyone and no one. It's an open source project.
So the way you can make an open source project and contribute it today, you can host it on anywhere you want. So there's not a single thing that you cannot do today that you will do in Web3, unless the case where everybody owns everything and everybody pays for everything.
No, as long as income inequality is there, that will translate to any other system that's mass adopted by humanity.
Only if it becomes efficient, then
Efficient and there's some promise of money.
Yeah, promise of money and it's an upgrade over the web. This will become centralized again. So that's like it's that's what people have said about it. Like they are never going to get decentralized because physical resources dictate power, and power dictates who has control over what happens. If what happens in the crypto world is meaningful, then power will dictate what should happen. Power comes through physical resources. Who holds the most physical resources? They will dictate what should happen.
So why do these super intelligent investors, they why are they behind Web3? I mean, is it just to step aside from the government, avoid paying taxes? Is that the big thing? Because the new Web3 companies, they're not registered. It's not voice cubing, or it's just a it's just .eth.
Easiest, because it's the easiest way to.
There's no rules, there's no regulations. I don't belong to any state. I don't need to answer to anyone.
So because,
And the only currency that I'm using is my tokens.
Because it's easier to find another fool who will buy the stake of that company from you.
As long as it's marketed well.
And that is what is marketed absolutely well. That is what is marketed absolutely well. And that's why you'll find another guy who will buy it from you. That's what VCs care about. It's not about the next internet, right? Like, you create all these levels of technical jargon, decentralized Web3, next internet, difficult to understand for the common man, then you can absolutely sell this to the next fool. I mean, you go on, I was once on Reddit and someone told on a thread that the reason why crypto and all these guys is not taken off for actual use cases is because people don't understand it. I mean,
I don't understand it. And that's what that's my biggest problem. Like,
but do you understand HTTP protocol, or do you understand how the 5G internet, how it works? Do you understand what is Shannon's limit?
no.
Nobody understands all that. It is providing me some meaningful purpose. I'm using it. I mean, how many people understand how the what is instruction set architecture of the phone, of your laptop? Nobody gets it.
I just know that if I press this button,
the button, it performs a function.
Yeah.
Does crypto do that? No. It makes it more difficult to perform a function that is already being performed now. You make it even more difficult to perform.
So that's what they say, right? It's like the 1990 of internet. So it's still in it's not at the application layer, but it's at the protocol layer, and someone has to build the email analogus of blockchain.
That is the biggest policy. So internet.
But my question is, we've already gone through those decades. Why do it again?
No, the question is, internet, when it first came into existence, proved a way to connect two disconnected entities over digital.
Sure.
What is it that you are doing which I cannot do today?
And do you think this will stop sometime? Like, will Bitcoin die?
No.
What reason?
The reason is that the supply of fools is unlimited.
The supply of?
Supply of fools is unlimited. That because every year you have the new generation comes out, and they're unaware of all this, right? And they're gullible. Absolutely, Bitcoin and these are not going to die off in the near term at least. So you should buy the dip. Should sell off in the next cycle.
So are you officially suggesting to our viewers to buy the dip after?
No financial advice.
No financial advice.
If you ask me, I'm gonna buy.
Thank you.
I'm gonna buy sometime.
You're going to buy the dip?
Yeah, because I'm telling you, the supply of fools is unlimited. So definitely, they came up with all this, right? They're not come up with the next scam. That is why this is the greatest build. This is the greatest financial creative thing that's been built.
This is the greatest scam.
That's it. Exactly as you said, it's the greatest. Because you can keep creating new layers of jargon. Like, so many layers of jargon. Like, you can confuse already. Many people cannot get grasp of what is NFTs and Web3, and base of them is actually useless. It's very difficult even for us to explain here, right? I mean, unless we hold a seminar over 7 days.
Seminar over 7 days with hey.
Yeah, unless we do that,
I just don't understand.
You cannot explain it to people that what these guys are trying to do is incredibly inefficient and incredibly useless. So because people are not going to understand it, there's going to be fools who will buy these coins, and they'll come into these casinos, they'll try to play this game, and it's not going to end. So it's always going to be this. But what's going to happen is, I think regulations are going to come in. It's not going to change a lot.
No, regulation. I think they did a smart thing, right? Like, they put a tax when you convert it back to fiat, because these idiots should understand that there's no free lunch.
That's all that's going to happen, right?
And the TDS that Indian government imposed,
30%.
1%.
Yeah, 1% every
transaction. That's brilliant. I support that, because see, enough people have lost money over here. Like, the way you term it, that's why I was so fascinated by the term that you've coined, Bankruptchain. It literally lived up to its term, right? Like, and people like Nikhil Kamath, right? So Look at him. He says, I was looking at the documentation around some stable coins and some of the exchanges, especially the ones outside of India. And if one reads the fine print, a lot of these guys, they openly claim, that during the sell-off, they can stop withdrawals
That's what
and
happened.
halt trading
That's what
and
happened.
all of that. So one has to be really sure what exchange and what bridge they are using and what is the concept of stablecoin. If they do not disclose what is backing it and what has happened to their money, which has gone into it, one could it just defeats the purpose of the stable coin. It doesn't have any meaning. Just because you term something stable, it doesn't become stable. And now people are attacking Nikhil Kamath, and he's
Because he's not a crypto guy, and
Yeah, he's
everybody
not
who's
old,
not
right?
into crypto is evil,
Mhm.
and everybody
not evil. They're stupid.
is stupid and evil. I mean,
So they say there are two kinds of people: people who are into Web3 and people who are yet to be in Web3.
yeah, I mean the guys who are criticizing it like as a evil because
No,
that's how religion
we are
classifies.
we are naive.
Yeah, that I mean it's pretty much like a religion, right? You can't question it.
So this
You
is
just got to get behind
so
it.
this is blasphemy.
Yeah, this is blasphemy. All of this what you is talking is blasphemy.
Yeah, this is
But I think that's uh if you are really smart, you got to think of the ways as we explained about how Tether, Do have profited from it, and you got to understand that because supply of it will never die. This avenue is never going to. So governments are smart. So governments are smart, right? They say, yeah, do your game as long as you give me my cut.
Yeah,
As long as you give me my cut of tax, do your game.
sure.
So this is never going to die. This is never going to die. Only the losers are the ones who were losing money in casinos. I mean, nothing can be said about them. They're the same guys who will go back and say communism, but
No, so this is very similar to MLM, right? And I've been vehemently against MLM for so long, right? So multi-level marketing has destroyed lives. And I've personally seen so many people get into it, unable to get out of it, who ruin their lives. It directly led to financial ruin. And when there's something that is leading to financial ruin of citizens of a state, obviously the state has to come in and take control over it, right? And
but
stop
when the citizens are not willing to listen, when they're willing to listen to this foolish
No,
influencers and
citizens
lose
will
their
be
money.
foolish. That's the whole point of me again. See, citizens will be foolish, and the citizens don't have the complete data, and that's why I'm against the governance token in DAOs, DAOs, as they call it as well, because the whole issue that's plaguing democracy is a lot of stupid people getting votes. I think it's a point which no one talks about, right? Everyone is talking about okay, distribution of wealth, making it more democratized, making more people's voices heard, but talk about efficiency.
But
Like
yeah,
Web 1, Web 2 is more efficient than Web 1, right? Is Web 3 more efficient than Web 2?
no, it's
It cannot
terribly
be. I mean, not even on paper is it more
not
efficient.
even paper. That's the question, right? Like the only thing you're selling right now with this entire scheme is decentralization, and nobody has asked for it.
And people who are actively participating in Web 3 don't give a damn about decentralization. They have $100. They want to make 200 tomorrow.
Yeah, that's all. That's all they want. Nobody cares about. I mean, because theoretically they don't even understand what is decentralization. I mean,
Sure.
lot of them cannot tell you the difference between decentralization and distributed servers.
Yeah, sure.
They cannot tell you the difference between these two. So those are those guys. Nobody really cares about that. I mean, nobody cares if they are the coin they are.
I think this term about decentralization, it's more to convince people who ask questions.
Yes,
Like you said, they are manufacturing these layers
jargons,
to keep jargon to keep.
layers. Yes.
Yeah, they're drowning us in paperwork. Yeah, so what's your final take on this? As in, what do you think is there in the future? And yeah, and one more point which I want to touch about is like about financial ruin, right? And I think a lot of these influencers are contributing to it. Like everyone who's going on Instagram asking people to buy cryptocurrency without taking the responsibility of their advice, right? And since everything is so anonymous, we don't know how much a single person is holding, right? And that's the reason why SEBI or SEC have so many rules about people going on broadcast channels and talking about stock investments or stock recommendations. The whole point of including those regulations is to make sure that the citizens are secure from financial ruin due to some stupid asshole who's charismatic, driving all like Pied Piper, right? Driving
Yeah, I mean,
them
that's
into a cliff. So there has to be some accountability, right?
that's the exact thing we don't want here. Accountability comes if someone is there to hold you accountable. In a
So you don't
decentralized
know.
la la land,
So you
there
don't
is
want
nobody to. There is nobody to. That's the world they want to create. Nobody there to hold someone accountable. You cannot. That's why that's such a world will never come into existence. But they have created one where you can run quick, get rich
get rich quick.
quick schemes, and uh, of course there is no accountability in that. That there will never be. That's the world they wanted and they created it. We're not gonna adopt it. Nobody's gonna adopt it. That's the bottom line. That's my takeaway. That's what I would say.
So do you think the world is a better place now?
It's yes.
So it's a better place because poor Uncle Madoff, he got jailed.
Dokons, and you could have 100 more of them. You could
Yeah.
have a new coin next year. You could have. I'm waiting to see what will they invent next. So this
I'm
guy,
waiting to see what will happen to Tether.
they will live. But what I'm willing to see is where will they go next? They said Web3, NFT, the cycle's dead. So what's the next cycle? I'm waiting to see what is the
No,
creativity.
Web3 is not dead. Yeah, NFT sales have dropped 80%, but that's okay.
I want to see what is the next thing they're going to sell us. I mean, how will they rise from this? The financial, I mean, the creativity they will show in this is what I'm absolutely excited to see. See you guys next episode.
Yeah. And if you have any use cases that we can explore, or if you find anything that we are talking which is away from reality, and if there's some corrections that you think you should make from the comments that we made, please let us know, and we will definitely take into it, because I am genuinely curious about how this technology is going to work. Bill Gates is writing it off, a lot of people writing it off, but at the same time, a lot of smart people are encouraging it. A lot of smart people are investing a lot of time and energy in it. So I am genuinely curious on what are the use cases. How is this going to make the world a better place? And I'm not being sarcastic right now.
So I don't expect you to get good answers, but let's see.